Welcome to our April market update, federal budget edition. As the Morrison government clears the decks ahead of a May election, Australians will be weighing up the impact of their household budgets. The war in Ukraine added a major new source of uncertainty to the local and global economic outlook in March. Larry Fink, CEO of BlackRock Incorporated, has stated that the Russian invasion of Ukraine has put an end to the globalization we have experienced over the last 3 decades. Economic sanctions against Russia have cut its oil exports, sending crude oil prices surging 6% over the month to more than $111 a barrel. When you consider not too long ago, oil was realistically, they were having to pay to get rid of their barrels. This puts further pressure on inflation already on the rise as global economies recover from the pandemic. When fuel prices surge, carriers absorb the increased cost of the short term. Ultimately, however, the costs hit retailers' bottom lines. In the end, they're faced with a lose-lose decision to either absorb the cost themselves or pass on to their customers, placing even more pressure on an already critical cost of living crisis, stated by Rob Hangozada, the CEO of Shipit. President Biden has ordered the release of up to 1 million barrels of oil per day from the US Strategic Petroleum Reserve. The US consumes around 20 million barrels of oil per day. Biden's plan would add up to around an extra million or 5% oil supply per day, plan focused on a short-term price alleviation, and it's not really sustainable in the long-term solution. Still in the US, inflation has hit a 40-year high of 7.9%. The US Federal Reserve lifted official interest rates in March for the first time since 2018 by 0.25% basis points, to a range of 0.25 to 0.5. UK inflation has also hit 6.2% in February, the highest level in 3 decades now, and well above expectations of 5.9%. The Bank of England thinks inflation will hit 8% by April. In Australia, the lead up to the federal budget added to the uncertainty. The Reserve Bank is taking a patient approach of interest rates, for now at least, but with inflation at 3.5% and tipped to go higher, it is expected to begin lifting rates later this year. Australia's economy grew by 3.4% in the December quarter, the strongest gain since 1976, as the nation emerged from lockdowns. Unemployment fell from 4.2% to 4% in February, but rising prices are putting pressure on household budgets. Petrol prices hit a high of $2.12 a litre in March, costing the average motorist an extra $66.20 to fill their tank from the start of the year. I did notice though, petrol at the Bowser was down to $1.88 yesterday, since the budget has come out and said they will slash taxes on petrol. Consumer confidence is at an 18-month low, with Westpac Melbourne Institute Index down 4.2% in March to 96.6 points. And Australian property rises rose 23.7% last year. That's the strongest growth since the Residential Property Price Index began in 2003, says the ABS. This has pushed an average mortgage on established homes to a record $635,000. With these gains, the Australian household wealth climbed 4.5% to $14.7 trillion in the final 3 months of 2021. Private sector credit for February was up 0.6%, in line with expectations. Building approvals for February rose 43.5%, well ahead of estimates of a 5% improvement. This rise in February was driven in large by, apartment approvals New South Wales and Victoria, according to the ABS. One of the problems, of course, is supply to the building industry right now, with most builders, and as we know, large builders, having gone under just recently. Record job vacancies were 423,000 job vacancies in February alone, 27,000 more than November 2021, and 200,000 more than before the pandemic, according to new seasonal adjusted figures from the Australian Bureau of Statistics. Rising commodity prices, iron ore, wheat, were both up almost 5% in March. pushed the Aussie dollar to around 75 cents. Australia is outperforming Wall Street for the first quarter. The S&P 500 down 4.9%, but the ASX 200 was up about 0.75%. Australia is actually outperforming for once, one of the first times in probably the last 5 or 6 years. We've also had a spectacular month, up 6.39%, with the S&P 500 up 3.6%. The reason, of course, is that a combination of the Russian risk interest rate fears have hurt the technology-heavy US markets. All our tech sectors down 25.5% this year, whilst Australia's major sectors, resources and banks, have been putting on a really good show. Resources don't mind a dose of inflation, and bank likes higher interest rates. Resources are up 9.2% in a month and banks nearly 10%. Thanks for tuning in. More next month.